welcome to the VSA Capital Tech and Transitional Energy podcast. It's March the 20th, Thursday. It's a beautiful sunny day, and we're hard at work, not enjoying it at all, aren't we, Phil?
That's actually quite true about the weather, and we are hard at work.
Yeah, no, we're always hard at work. Anyway, look, I mean, the world is still in complete and utter chaos. Donald Trump thinks he can cut a deal, but as far as I can see, he's still miles away from actually sorting out any peace in Ukraine, because Putin is just, frankly, playing with him like a toy. And Europe, obviously, is coming out and has its own plans. Now, there is something you may wanted to talk about as a general reference, of course, is that Europe now said they want to create this 150 billion euro European defence fund, but they don't want the UK in it. Now, the UK is obviously getting upset and saying, that's a shame, isn't it? I say, well, actually, that's quite good, because we don't actually need to get in with them, in my view. We actually, of course, we have our own nuclear capability. We're part of AUKUS, which is Australia, UK, USA. And in reality, actually, if we wanted to have a really good defence force, I suppose the US, for whatever reason, decided to abandon AUKUS. I'm not sure it will, actually. But then we've got Canada, Australia, New Zealand, bits of the British Commonwealth, where we all sort of work really rather well together. So, people could say that, well, that's negative for UK defence companies, people like British Aerospace, Rolls-Royce. Will they lose out from Europe, frankly, being petty and excluding? I don't think so. I think they're closing in their market. This is just what Donald Trump is saying, is that they just look internally the whole time. They don't see the big picture. So personally, I view it as good news, but short term it could be seen. I know you regularly talk defence stocks, Phil. So it probably may look at it slightly differently. Any comment on that?
Yeah, well, it's new funding for defence in Europe, isn't it? Or proposed new funding for defence, and there's actually a lot of funding already there and money being spent. I mean, you're right. I mean, we've got all of the companies or access to the companies for equipment. The only bit I think is it's going to be interesting to see what happens in terms of aerospace and fighter planes, because we've seen a lot of countries order F-35 fighters, and what they do as an alternative, whether it's French Mirage or Eurofighters or whatever. I think that's going to be really, really interesting. But yeah, I mean, I have to say I agree with you in terms of that budget.
Yeah. Anyway, it's early days. I think personally, as most people know, I believe in bamboo politics and bamboo broking, and you go where the wind's blowing and you play nicely with everybody in the park. I don't like this sort of rather clubby type thing where actually you get a group of people who don't really actually get on that well with each other, all trying to be in the same club. But that's my view. Now, a few other things I noticed this week. There's been a lot of talk about BYD and their new 5-minute charging EV car. Now,
yes.
Regular listeners on this podcast know that I have a view that cars will pretty soon cost about £10,000, a range of about 1,000 miles, and you'll be able to charge them in 5 minutes. And because of that, everyone will have a Chinese EV. And you can't beat the Chinese. There's no way you can beat them. So don't try. Don't put on a tariff. Let consumers have really cheap, really good EVs. If you want to beat the Chinese, find something we're better at them than them, and compete them on that front. But they're going to happen. I'll tell you, we're going to go. This will happen remarkably quickly. People get impatient. They forget things do take quite a long time. You and I, Phil, we still remember doing our A-level maths, as it was called in those days, with a slide rule and sign books. And, today you sort of forget that. We've all got these, iPhones that have more computing power than Apollo 11. In fact, they're unbelievable what an iPhone does now. It's extraordinary. Anyway, but I did notice that. And look, people who say that the EV revolution is slowing down, they're wrong. It's not. It's still happening. But there obviously are some changes. And the other one that's quite interesting today is obviously Nvidia have actually come out and said basically they're going to spend hundreds of billions building up basically a US supply chain, which is what Trump basically wants them to do. And obviously too many people are too reliant on TSMC TSS. I can't get my words out today. So
TSM.
you know what I'm trying to say.
I
Taiwan
do.
Semiconductor Manufacturing Company.
Yeah.
Because obviously they're worried that, well, China's basically going to take back Taiwan. It probably will at some stage. Not that that's a political gesture or anything. But I think that is what Trump's trying to do: move jobs back to America. And Nvidia have basically done exactly what he sort of requested there, haven't they?
Yeah, I think it makes a lot of sense, though, Andrew. I mean, the US, the semiconductor industry, if you look back to the 90s, they were manufacturing 24%, something like 25% of the global silicon chips, and now it's down to about 8%. That you see how dependent they've become on, offshore sources like TSMC. I think it's very sensible.
Yeah, look, I mean, so that's also interesting. I don't know that's going to really help the UK, unfortunately. I'm not sure we will get caught up in that. Although, of course, ARM is a huge semiconductor play, and it is a British company, even though it's listed over on Nasdaq. So I also note, just as we do start recording this at 12 o'clock, and the Bank of England decided to come out and say it hasn't changed its rates. They're sitting at 4.5%. In case you haven't seen that, Phil. So, well, I'm sitting at my desk and I see these things live. But that was what was expected, so no surprise there. So, yeah, I mean, the markets, gold, not this is Tech and Transitional Energy podcast, but gold does affect everything in a way. Gold is still racing ahead. I think, as most people know, myself and VSA, we have been uber bullish on gold, predicting it going through 3,000 for some time. It'll actually go, in my view, to 4,000, maybe even go to 5,000. I think people should not underestimate just how far gold is going up. And other commodities will be dragged up as well, which obviously then will have an impact a little bit on some of the tech and trans situations. The good news for battery people is that lithium probably isn't going up. Likewise, vanadium isn't going up if you're doing a vanadium flow battery. So those commodities that aren't going up, the one that will are things like copper, tin, and tungsten. Anyway, for any tech and trans listeners that don't listen to our mining podcast, there's a little bit of additional information for you. Gosh, we tell it all, don't we? Right. So it has. I think it has been sort of a bit quiet this week, and there's been various bits of news, but they haven't set the world on fire. But come on, Phil, tell us what you saw.
All right, I will. Well, first, just quickly on the metals that you mentioned are widely used in electronics, so they've got their role to play. Those commodities in the tech field. Strategic investment agreements. Filtronic, FTC's a ticker, 227 million market cap now. These shares have doubled in 12 months and showing the power of strategic investment and having a large corporate client. And in their case, Filtronic, they design and produce radio frequency and microwave millimeter wave electronics. And that type of electronic system is used in communications, used in aerospace, particularly defense and space markets. But here, the strategic partner is SpaceX. Satellite communications, they had a strategic agreement announced with them in April of 24. Part of that, there's a major agreement to supply amplifier modules for ground stations for SpaceX. It involved investment from SpaceX as well in the company. And they've just announced part of that agreement that Filtronic's to increase its supply yet again for its E-band modules to support SpaceX rollout. And also that the company's issued 10.9 million of warrants of shares to SpaceX at a particular exercise price based on those orders received. So very good progress for that strategic agreement.
Yeah, look, strategic deals are very much the way forward for most companies at the moment, the way the bloody equity markets are. The good news is we're rather good at doing them. So we're working on quite a few, as you know, Phil.
Yeah.
In fact, we're working on a few you don't know about as well.
No.
So there you go. But also, if there's anybody out there listening who wants a strategic partner brought in, do give us a buzz. We'll come and help you.
There we are. We will indeed. Now, this is a company, Andrew, that we've not necessarily spoken about before, but has been around since 1883, listed on the stock market for a very long time. It's Goodwin PLC. Ticker is GDWN. Market cap's £540 million, and the shares are up 37% year to date. Now, the reason I mentioned Goodwin is that they specialise in foundry metals. So this is all about dealing with molten metals and the products that result from molten metals and the metal structures. They manufacture parts for particularly for pumps, but also for the nuclear industry, and things like storage vessels for waste materials in the nuclear industry. So I'm mentioning this as part of nuclear and the tech and trans side of things. But Goodwin reported a trading update this week, and their shares are up by 6%. They report record £300 million forward order books. They received a very large order for valves, and this is for LNG supply, liquid natural gas. It's a $15 million contract. So they've talked a lot about that in their trading update. But also on the nuclear side, they're already working with Sizewell B, Hinkley Point, and Sellafield in relation to the handling of waste. So it's an interesting company to look at from the transitional energy perspective. Also, because it is involved in metal foundry practices, it's exposed to defence equipment as well, strategic defence. So that's Goodwin. It's quite an interesting one, that.
Yeah, it is quite interesting. Yeah, thank you.
There we go. Just on battery tech briefly, there was a little update from the interims from Gelion. Thanks for that. Ticker's GELN. They're developing lithium sulfur batteries. The shares have not been a great performer, but they do seem to be making some progress with their technology. They've announced at the interim results that they've, where are we here? They've achieved 402 watt hours per kilo energy density, which actually is, which is pretty good. They've announced that they're doing further developments with IP they acquired from Johnson Matthey, working with the Advanced Propulsion Centre on that. And they've been awarded grants as well by the Australian Renewable Energy Agency. This company, they raised £1.9 million earlier in the year, and they got cash at the end of their interim period of £3.5 million. And that was Gelion.
Yeah, I like what they're doing again. And the trouble is, as we know, unfortunately, our cost, it's a very small company with not a lot of cash. They're trying to develop, new batteries. You need hundreds of millions. That's the problem. But anyway, there we go. Okay.
Yeah, that was that. Right. Moving on to IT in particular, and IT services, Computacenter. Ticker is CCC, 2.8 billion market cap. And we watched this. We talked about this one before, Andrew. It's a big provider of IT services, and that's everything from cloud services to IT security to IT equipment. And it's a very interesting one to watch. This one from the tech perspective in terms of customer spend, where they're spending money, and what's happening to those spending patterns, because it very much influences the tech markets. They reported full year results to December. And I just note, their revenue was up by 2.9% to just under £7 billion. Gross profits were more or less flat at £1 billion. But they have really strong cash inflow of £417 million on that revenue of just under £7 billion. So strong cash inflow. But what was happening in their end markets? This is really interesting. They're saying that in Europe, the public sector business grew while corporate demand was, quote, more selective. But what they did see was that technology areas like security was being prioritized over like refreshing PCs and hardware for customers. They also saw corporate public spend now in terms of AI and AI developments, and they've benefited. And something we always look at for any company is in terms of its geographical diversity. And they were saying, I think from their results, that they had North America, very strong performance. Their weaker growth, I think, was in the UK, softer UK market conditions. Also, I think they're a bit stronger in Germany as well. So that was Computacenter. So one Spatial, again, one we've talked about. Market cap is ticker is SPA. Market cap is £64 million. They do geolocation software. And so this is software that's all related to detecting where infrastructure is in the ground and mapping it, for things like roadworks, for pipe repairs, for gas repairs. And they got, it's UK business, but also they have business in Europe as well. They had a trading update for the full year 2025. Said that their software sales were they had a high growth margin, increasing over to up by 35% to £11.5 million versus £8.5 million. So the recurring revenue was £21 million. And that was 62% of their overall revenue. But what they highlighted in their trading update was they signed a large contract in Belgium. That was announced in February of 24, and they said that even though they've begun delivery of it, there's been a delay in the contract, and that's had an overall impact on the group. So therefore, the revenue is expected to be £33.4 million versus 32.3 during the earlier full year. So that's caused a bit of a dip in the share price, but they said that contract is going ahead. So that was one Spatial. And the only other things I noticed, Andrew, because it wasn't a great one for a news slide this week, AFC Energy.
Yeah, go for it.
They had full year. This is fuel cell company, the full year results. They also had a strategic update. They've got a new CEO in place, John Wilson. Just an, I mean, the only thing that caught my eye in this, obviously it's a fuel cell company, but they've developed an ammonia cracker technology so that you can actually use hydrogen fuel cells in gensets. And this is something that an area I've had a look at before, but they're developing a product for that. They've also made various announcements on fuel cell developments during the financial year. They're working with Speedy Hire fuel cells that generated £4 million this year versus zero in 2023. Closed the year end at 15.4 million of cash, but the loss after tax was 17.4 million pounds. So I mean, it's getting back to what you were saying, Andrew, about the scale of R&D investment that is needed in these new technologies for clean tech. But that was AFC Energy.
I mean, I think my views on this one have been always fairly well known. Now, they do seem to be changing the nature of the company, and therefore some of my views maybe should change. If the new CEO is listening, then do come and have a chat with me and see if you can convince me to change my view. Because maybe if you've changed the business, my view should change. But until I understand what you're actually doing now, I can't give a view. I do know a lot of your shareholders. But, the stock's come off a long way from its highs. I mean, this whole space has been just so tricky. And, of course, the other problem is, I'm looking at a few fuel cell electrolyzer companies at the moment. Of course, there are an awful lot out there. And everybody claims they've got the best thing since sliced bread. They haven't. And no one can compete against the Chinese, who produce these things far cheaper than anybody else. So there are a lot of big hurdles in the road. But I'd love to hear the story and be updated from the new CEO to see if he can convince me differently. If that's it for you, just one little shout out for a teeny one. Pressure Technologies this week announced trading's all in line at their AGM, but also a big contract. It's very small. It's doing all the right things, cleaning up the business, selling peripheral things. Now focused on Chesterfield Special Cylinders, which we've been to a few times, Phil.
Yep.
So it's an enormous factory up in Sheffield way. If hydrogen ever does take off, you need their cylinders because they are very specialised. But they're a bit of good news for them there. So I'll give them a little bit of a shout out. Why not? I'm a shareholder.
There we go.
There you go. All right, that'll do. Usual stuff. I hope everybody's enjoyed it. Do send us messages. You never know. Send us something really fascinating. If you want to sponsor us, just sponsor us. We'll take money anytime. Oh, no, I've just done my bribery. Sorry, FCA update. I can't say that anymore.
No,
go on. I'm cutting it off. Let's see if there's more news next week. Thanks, Phil.
Okay, take care, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.